at the start. 25 points lower is what we have on the Nifty at this point in time.
At this point in time, we have the Bank Nifty, which is down over a whopping 650 odd points.
It is sitting with cuts of 115 points. That is the Nifty.
Many sessions now, it's all been about just choppiness, but not really picking a direction one way or the other, either up or down.
It's about a 100-point knock coming through on the Nifty as we speak, 0.6% down on the Nifty. The Sensex lower by 376. Banks have underperformed today. The Nifty banking index is down close to about more than 1.2%.
Hello and welcome. You're watching Markets Today, the show where we track about day's headlines and the trading actions in just 5 headlines. I'm Sonal Bhutra, and these are the top headlines that we are tracking for you. Stock markets wobble across the globe, and we saw that the US inflation data is due later today. Sensex loses over 400 points, Nifty loses over 100 points, and rupee remains on a tight leash against the dollar. Infosys largely meets estimates in the second quarter, raises the full year guidance for revenue and margin, also clears a 9,300 crore rupee buyback. Hindalco and Nalco firm up on reports that the US may curb aluminium imports from Russia, even as concerns over a global slowdown rise. The centre clears a total compensation of 22,000 crore rupees for oil marketing companies towards losses on LPG sales. In a reprieve for these companies, the move will only trim and not stem losses, say analysts. In stocks and news, Adani Wilmar fell 3% on a weak second quarter update, while Sterling and Wilson falls on a weak second quarter. Here's the line of what we have in store for you. It's a packed show today. In Market Opinion, we have Mahesh Patil of Aditya Birla Sun Life AMC and Dan Paimanod of Credit Suisse. And in Big Corporate Voices, we have Thierry de la Porte, the CEO of Wipro, and C. Vijay Kumar, MD and CEO of HCL Tech, and Salil Parekh, of CEO and MD of Infosys. All right, market sees cuts ahead of crucial economic data from the US. Nifty and Sensex end over 0.5% lower, with banks being the biggest losers. Reema Tendulkar is here with all the market action. Reema.
Thanks so much for that. It turned out to be a volatile session of trade. The street clearly nervous ahead of the all-important US CPI print. It was also the weekly options expiry. Just look at the intraday chart. At multiple times through the day, the market sold off. They tested that 17,000 mark, went down to the 200-day moving average. The sense you got is that they're reluctant to break down, but it's also finding itself very difficult to climb higher and move up. The low today is very important. It's 16,957. It coincides with the low that the markets made over the last 2 days. So that level is going to be very important. Broadly, we still continue to hold on to that range, 16,950 on the way down to about 17,300 on the way up. All sectoral indices today ended in the red. The mid-cap index under pressure, the advanced decline ratio weak, one stock in the green for nearly 2 in the red. It was a lot about IT, and it was a tale of two cities. Wipro on one hand ends with a cut of 7% as the street is disappointed by its Q3 guidance, the lack of recovery in its margins, the fact that the deal wins were also fairly muted in the current quarter. HCL Tech, on the other hand, a very strong comeback, an all-round beat, and the street rewarded the shareholders of HCL Tech. Banks underperformed, so the Nifty banking index ended with a cut of more than 1%. State Bank of India, ICICI Bank, HDFC Bank. HDFC Bank, by the way, reports numbers on Saturday. Axis Bank, amongst the large cap private banks, Axis Bank saw a smaller cut, ends with a cut of close to about 0.5%. CLSA today raised the target price to about 1,100. A couple of the other big winners include Sun Pharma, auto names like Tata Motors, Eicher Motors, Britannia too saw some buying. On the losing side, in the mid-cap space, India Cement saw a lot of selling pressure. Indian Hotels too was weak in trade. On the gaining side, Nalco, that was a big mover. AB Money posts their numbers, Rights, Pennar, order wins, boosting the prospects of these stocks.
Reema, thank you so much for joining us with that analysis. And here's some expert opinion for you now. Mahesh Patil, CIO of Aditya Birla Sun Life AMC, said that they are positive on certain public sector banks which have better capital adequacy ratio. He added that their view on the auto space is neutral, as the valuations in the sector are slightly on the higher side. Listen in.
Normally, the PSU banks are more exposed towards the corporate credit. And there we are seeing that it's looking fairly benign kind of a cycle. A lot of corporates have delevered in the last 2 or 3 years, and their balance sheets are much stronger. And they are in a position now to really start leveraging further. So given that, I think the larger PSU banks, the better PSU banks, I think they should also do well. So we are also positive on some of the select PSU banks where we see the capital adequacy ratio is good, where the ROAs are improving. But over a longer term, our preference still remains with the private sector banks, which have got a retail focus. Autos, we are, outlook is improving, no doubt about that. We've seen the volume pick up, especially in the four-wheelers. That's doing well. Even tractors and other sectors are doing well. Commercial vehicles, after 2-3 years of downturn, we are seeing that pick up slowly on the back of improving economy. So overall, the outlook is definitely looking good. But I think our view of the sector is slightly neutral because the stocks have rallied. Some of these valuations are probably slightly on the higher side.
Okay, let us get in some more opinion. Dan Feynman, co-head of Equity Strategy Asia Pacific of Credit Suisse, said that interest rates are expected to stay high next year as well. On India, he noted that balance of payments and overvaluation of the currency are the key challenges, but the economy as a whole is doing better compared to the US. Take a look.
The problem in the US, as everyone knows, the Fed is going to have to be raising rates. We're concerned that markets are still a bit too optimistic about what happens in 2023. I think people are prepared for this year, but we aren't expecting a pivot for the Fed to start cutting rates next year. We think that rates will stay high next year. India, we have some problems. We have a balance of payments challenge. The currency is probably overvalued, but the economy is doing much better than what we will be getting from the US. There is EPS risk, but I'd say less than in the US. PE of India relative to global equities, relative to Asian equities, all-time high. We're in uncharted territory, and that makes our foreign clients feel uncomfortable.
Okay, that is the market opinion, but we have to go to the second headline now, where Infosys largely met estimates in the second quarter. The company has raised the full year guidance for revenue and margin and also cleared a 9,300 crore rupee buyback. Rima is here with the details. Rima.
Thanks so much for that. So Q2 is a mixed performance. Revenues missed street expectations. It's a 4% constant currency revenue growth, but margin expansion has come in as a big surprise. Margins have gone up by 150 basis points to 21.5%. The FY23 guidance has been tightened. So on the top line, earlier, the company was expecting a 14 to 16% growth. Now they're expecting 15 to 16%, which means at the lower end, the company has raised the guidance by 100 basis points. This is a positive. Margin guidance in a way has been brought lower. Now they're saying that margins will be in a band of 21 to 22%. This doesn't come as a surprise because anyway the margin guidance earlier was that we will be at the lower end of our guidance, which means closer to 21%. The big positive in the numbers is the deal wins. Deal wins have gone up to $2.7 billion. This compares with the 4-quarter average of $2.1 billion. So there is a sharp pickup that we've seen in deals. Attrition has moderated for the 3rd quarter in a row. In the management commentary, the management has spoken about concerns surrounding high-tech and telecom. These are two new areas that Infosys management has called out where they are seeing growth moderating. That said, the relevance of their proposition in terms of bringing transformation or cost efficiency stay, which is why they're seeing a very strong large deal pipeline. They've also announced a buyback, a 9,300 crore open market buyback at a maximum price of $18.50. All in all, it's a good showing from Infosys and the street should like it.
So on the share buyback, of course, the board considers a lot of factors, but coming to a specific point on the maximum, since it's an open market offer, it's limited to 15% of the share capital and reserves, which is about 9,400 odd crores, give or take. So the board has decided a figure of 9,300.
On the deal wins, I think this is an incredible performance from the company. 2.7 billion is a very large number. We have a very strong focus on large deals. And 54% being net new, that gives us a really good platform for what we see in the future. Now, large deals, we've always maintained, these are volatile. Some quarters, the numbers are high, some are low. These are not a very predictable outcome. But in general, if you look over a 4-quarter period, we have a fairly good large deal momentum. Our pipeline for large deals remains quite strong today, and it's in a good position.
Okay, that is the commentary coming in from Infosys. But Reema, you have to stay on and tell us, since all the IT bigwigs have reported Q2 earnings, how do they stack up?
Well, in terms of the numbers, it's pretty much revenue growth has been similar across all the large cap IT companies, so approximately 4%. And there was no big revenue positive surprise across all the 4 companies. The big positive surprise has come in on margins, where TCS, Infosys and HCLTech's margins. So 3 out of 4 of the large IT companies have positively surprised on the margins, and margins have expanded quite considerably by 100 to 150 basis points for these 3 companies. Only in the case of Wipro, margins were largely steady, flat on a quarter-on-quarter basis. The guidance both by HCLTech and Infosys has been tightened. So Infi today said that constant currency revenue growth will now be at 15 to 16% versus 14 to 16% earlier. But HCLTech, there was a revenue guidance upgrade. They're now expecting 13.5 to 14.5% revenue growth versus 12 to 14% earlier. So HCLTech was a full guidance upgrade, but in the case of Infosys, it was tightening, but all in all positive because the lower end was raised. Wipro's Q3 guidance, not full year, Q3 guidance was muted, very modest, and the street was disappointed. In terms of the hiring numbers, TCS and Wipro's hiring numbers are significantly lower than what they've done in the past. Only in the case of HCLTech, as the chart will tell you, the hiring numbers are pretty similar to the past, which is why the street gave a big thumbs up to HCLTech's numbers, because it was an all-round beat. Deal wins. The one which tops the chart here is clearly Infosys. Look at the way the deal wins have picked up on a quarter-on-quarter basis, 60% higher. $2.7 billion is the deal wins, new deal wins from Infosys this time. So that's the standout number. The miss over here was again from Wipro, where the deal wins actually declined on a quarter-on-quarter basis. So in a nutshell, it's a pretty good showing. Revenues in line with expectations, largely a margin beat. The companies sound more optimistic than what the market was fearing on demand. Hiring is slightly on the lower side compared to the track record of the last couple of quarters. And on deal wins, it's a bit of a mixed performance.
Okay, all right, that's well summarized. Reema, thank you so much for that analysis. Moving on to the third headline today, Hindalco and Nalco were in the green on reports that suggested that US may curb aluminium imports from Russia. Prices of aluminium spiked by 7% on the back of this report. Nigel standing by with the details. Nigel.
Well, that's right. Overnight, aluminium prices, LME prices, they did spike up by around 5 to around 6% odd. And the key reason is that the United States, reports indicated that the United States is considering banning Russian supplies. That's aluminium supplies out there. Remember, for Russia, the big producer is Rusal. They account for close to around 6% of the global aluminium production. And ex of China, well, that's the largest producer itself. So if there is a ban, then there could be some sort of a base for aluminium prices. But the big question is, can the US in fact implement this? There are reports that suggest they would, but can they? Because the US imported aluminium products worth close to around $1 billion in 2021. That's not all. In the first few months of this year, well, on a monthly basis, the imports from Russia, in fact, they had moved up drastically. That's the first quarter, first couple of quarters of this year itself. Remember, this is not the first time. It happened earlier as well in 2018. At that point of time, we saw aluminium prices surge up by close to around 30%. But by early 2019, they realized it's not sustainable. And that's why these sanctions were lifted. For the time being, though, aluminium prices are holding steady, in fact, higher overnight on back of hopes that there could be some curtailment of supplies. Back to you.
Okay, that is the action in the metal space. But time for a break now. Stay tuned. We'll be back in a jiffy with the other headlines.